Good morning, everybody. Welcome to DCA. Ran had his gremlins in his audio system. Never seen, so it took 10 minutes to fix. Sorry for being late, everybody. Welcome to DCA. We have a lot of stuff to talk about today. And we're not going to waste any more of your time. So first of all, let's get the housekeeping out of the way. Let me just get rid of myself. Give me 1 second. And we'll ask how the guys are doing. This is going to be called DCA, a big deal. Whoops. I need to get rid of this guy. And I'm going to blow this up. Bear with me 1 second. And please, everybody, make sure you are subscribed to these channels. Links are below as we go forward. So let's bring everybody in. First of all, CTO Buddy, Ivan, and Mr. Banter, Rand, the Crypto Man. How are you guys today?
Good. It's good to be back.
Yeah. Let's say that everything that could have gone wrong today went wrong today, but we're still here and we're kicking.
But Ran, your sound system is too complex. Like it's like ETH with all the layer 2 scaling solutions. Like liquidity is not shared. This like your sound. Like too many inputs, outputs, microphone. What happened?
Let me tell you what happened. So first of all, as I was about to start my stream, I drank a protein shake, and immediately I felt my throat starting to close. And I'm severely allergic to almonds. And so I asked the guys here, I said, is there any chance there was almonds in that? They text the canteen, there was almonds in my drink. So here I am with the EpiPen in my hand, like ready to inject myself with the EpiPen. And then, we have power cuts in South Africa. And then usually in between when the power cuts off and the generator starts, we have a UPS. But this time the UPS didn't accommodate everything, and then everything shut down and crashed everything. But we're here, and we're bringing you crypto love and crypto wisdom, man.
Awesome. Well, thank you all for making it. And the audience is very, very happy as well that you made it too. So we're going to talk about a lot of stuff today. We're going to talk about some of the things that you just mentioned on your channel as well, Rand. But I'm going to look first at what happened this week and why. We're going to look at where the puck is going to be, which is very, very important in markets. We'll talk about the 10K whale stacking and everybody else is selling Bitcoin. We're going to talk about Bitcoin in the bond market, the potential there. And the reason we're going to talk about that is because of QE to infinity. We'll get back to that in a second. A little bit of TA stuff. Ask the TA pros about the inverse head and shoulders and how that could indicate a 33K level next. Or is that just too much hopium? And then we'll talk about what's going on. Is it Japan? Is it China? Is the debt ceiling being resolved? Is it Indonesia, etc.? Debt ceiling drama. We'll talk about politics, the Sailor Twitter vote, zero budget caps, global liquidity, SUI, and a whole bunch more. So you guys ready to go?
Oh, yes.
Let's go.
Okay. Well, let's start with probably, I think, one of the most important things that I kind of track is this one here. Let me pop it up and show you all. I'll pop it on the big screen. This is kind of the 10K whales have been stacking Bitcoin since a week ago. They started stacking when everybody else was selling towards the end of April, then took a pause after the first week in May and started stacking again. So the question is, who is this? Who is buying? Why are they buying? And do you think it's significant? And could they be coming from another part of the world? Could there be, I don't know, a county or whatever in Indonesia that's getting front running the rest of the world? But big chunks of Bitcoin are being bought while retail and everybody else, even 5,000 Bitcoin holders, are selling. What's going on here? Who wants to take that first?
So I ran the story on my show today because we found it this morning, and we found that there were 30 new addresses that we thought it's not only 10,000 plus, it's also 1,000 plus. There were 30 new addresses with 1,000. If you just let me share my screen, you'll see there's 30 new addresses with 1,000 plus Bitcoin created since May 4th, which is, from a month point of view, that's the most aggressive. I don't want to say ever, but I think certainly for as long as I've been tracking it, that's the most aggressive new wallets created with 1,000 Bitcoin since 4th of May. Now, look, it could be that someone who's got 100,000 Bitcoin or whatever, 50,000 Bitcoin, is breaking it up between X amount of wallets. We don't know what the real reason is. But it does feel like someone's buying. And I'll tell you why else it feels like someone's buying. And again, I covered this on the show, so it's pretty easy for me to go through. Number one, the PPI, the PCE data last week was horrendous. We all of a sudden have inflation coming back again, and it's Not like a little bit of inflation. It's a lot of inflation. Like they expected a 3.9, they got a 4.4. That's missing inflation expectations by a lot. Second thing is this debt ceiling crisis. Everyone's celebrating the fact that it's that there is a debt ceiling deal. The truth is, there's no real self-respecting individual out there that really thought that the US would default on their debt. Okay, countries default on their debt because they have to default on their debt because they really don't have money. When you talk about Zimbabwe, you talk about Argentina, you talk about Ecuador, you talk about all these countries, not Ecuador, but you talk about all these countries that defaulted on their debt. They don't default on their debt because the Republicans and the Democrats can't agree on a $50 billion saving in a couple of years. So everybody knew that they weren't going to default. So now the markets are celebrating the fact that they didn't default. But someone has to ask the question, who's filling up this treasury account? Who is going to fill this treasury account up with money from? The answer is that's going to drain $1 trillion of liquidity out of the market. So you combine a rate hike, which is now almost guaranteed. I mean, it's got a 58% chance, but it's pretty much guaranteed. Plus the fact that now a whole lot of liquidity is going to be taken out of the market. You got to say, hold on, where is this money coming from? Who is actually buying Bitcoin? Why is the price of Bitcoin coming up? That's the real question. We covered it on our show. We could probably talk a little bit about opinions as to where these buyers are coming from. But I think it is those are the questions we should be asking.
Yeah. Okay. So it's let me counter you a couple of things. One is people are obsessed with the rate hikes. At the end of the day, 25 basis points doesn't matter a hill of beans when we're already north of 500 basis points. It's a nothing burger. Second, I've said this 1,000 times, the Fed doesn't control inflation. It's controlled by things that are out of their control, like OPEC, etc. Third, I think there's just too much focus on the U.S. market. And this is a slide I tried to show last week. This one here. And this is how spot volume in April 2023, I don't have the numbers yet for May, but you can see it's all Asia. Okay, it's not the US. The US is at 67.5. It's like less than 20% of the total tally. And that's really a key point here as well. So people are far too obsessed with things like debt ceilings and the Fed and everything else. And I think people are just getting jaded from that story. And now they're looking forward. And I think it's very clear that the crypto market has been controlled by the rest of the world. You spoke about Japan this morning. There's Indonesia. There's other stuff bubbling up. There's Eastern Europe that are stacking too. So over to you, Anders. Ivan, what do you make of all of this?
Yeah, I mean, with what Ran talked about, the debt ceiling and basically 1.5, at least it's not fully confirmed, but from their deal on the napkin they made during the weekend, 1.5 trillion more debt is going to hit the markets. And Ran, you said that it's going to drain liquidity out of the market, but it could also be that they get it from the Fed. Because looking at Japan, the central bank there owns most of the debt. So the question is the money going to come from the public markets and, like you said, drain, or whether the Fed is going to step in ways they didn't do before, because the treasury markets are not like they were in the past, and that's going to be interesting to see the demand for these treasuries in comparison to previous times. But in terms of Bitcoin, I fully agree. You should guys check Chainalysis 2022 adoption report. I don't think I can share the screen because the CTO and I, when we share this, stream breaks. But the Chainalysis, they did a report about which countries are dominating crypto, and there you have Vietnam being number one, and they look at a bunch of different metrics like the exchange volume, DeFi, all kinds of other metrics they put together. So Vietnam number one, China very high up. Like you said, James, Eastern Europe, like Ukraine, both Ukraine and Russia are also very high up. Why? Because Russia has sanctions, Ukraine has war, and they both need something that is global, worldwide, and neutral in terms of money. So absolutely, most holders, most whales probably don't even speak English. They don't even watch this channel. And of course, with the news that China is coming back, Hong Kong opening up, it feels that we're kind of back to 2017, where 2016, 2017, where China again plays a big role, and that's why I tend to agree with the fact that we've had the US focus for the past 3 years. Now we're coming back to a more global focus in crypto, exactly like it was in the beginning of crypto, to be honest, because crypto has been traditionally very Asia focused, and now I'm seeing that the world is coming back to that state.
Yeah, I agree.
I must say, I think that your chart is probably the chart that summarizes the whole thing. The spot volume is coming from Asia. And if I just show you what we also spoke about today on my show, so if you just toggle to my screen, you can see that the Nikkei is now at all-time highs. The Nikkei has never been this high before. It's a function of Japanese liquidity. So Japan has been aggressively putting liquidity into the market, as Ivan says, through their central bank. And if you look at Bitcoin and how Bitcoin pumps every time the Nikkei gets a breakout, it does look like a lot of the breakouts actually are very correlated to breakouts in the Japanese economy. So while we all seem to be focused on Europe and the US and all those other good things, I think the truth is that if we were to call a spade, I think one of the big markets that's driving adoption and speculation in this market is Japan.
I totally agree, 1,000%. CTO, any thoughts from your side?
Yeah, I was looking forward to today because, I mean, I'm not a macroeconomist, so I am uncertain how this deal will affect the markets. Like, I read it more that they almost got a free hand to print money until 2025, and that will float in more printed money, and that could be positive then for hard assets like digital gold, Bitcoin. But I'm uncertain. I'm look forward to listening to you here. Actually,
it's not right. They don't have a license to print. They have a license to spend. And so the debt ceiling is specifically in relation to what I've got up on my screen is the debt that the US Treasury takes, basically the debt that's raised by the US Treasury, which is now $31.8 trillion. Now, they can't print money. They can increase the debt, but someone has to pay for it. So if I say where do you increase the debt from? Well, you got to find investors or people that are willing to buy your T-bills. Now, what does that do? It's going to take a lot of dollars out of circulation,
or the
which
Fed,
is why,
or the central bank.
Well, okay. If Ivan's theory is right, and if we get the central bank doing it, then it's a different story. Then markets must go into full rally mode. But that would be exactly the opposite of what they're doing with quantitative tightening. And I'll show you where the market's disagreeing with you is on the Dixie. So the Dixie is now edging back up towards 105, and it was at 101 when the Dixie started. Well, not started when we started this little pump. Now that the Dixie is at 104.27, now what that's telling you is very soon there is going to be demand for US dollars. Those are the same US dollars that are going to be buying the T-bills and getting a return on T-bills for 5% return on T-bills. And that's what the market's banking on, is that the US is going to go raising money off of 5% or whatever the number is, 5.5, 5.25 on their T-bills. And that's where the money is going to come from.
Yeah, this is very interesting because I kind of read it more that the one thing that both parties can agree on the US is to spend money when it's time for the next presidential election in November 2024. So I read that they kind of agreed on, okay, guys, let's spend money and worry later.
Yeah, exactly. There's a couple of things going on here in the market. Again, first of all, we know that the US doesn't matter. We also know the US dollar is the cleanest shirt in the laundry. Second, there is a lot of concern right now around the world. For example, Canada expects a huge crisis right now out there, and they are allocating billions and billions of dollars to a special fund because they believe the poop is going to hit the fan, as they say. In addition, markets are always forward-looking. They know there will be a liquidity drain when the bonds are issued because I think of this in simple terms. They're going to increase the debt by $4 trillion. The site you showed, Rand, is very important, but the most important thing is the bottom right corner that shows unfunded liabilities that are coming due faster because people are getting older and retiring faster. There's much more demands on the actual debt, so it has to explode. But a couple of things that are really important is when you take $34.8 trillion, $31.8 trillion dollars, technically they've already gone above the debt ceiling by $400 billion. Second of all, there's a lot more demands coming. And third, people know the money's going to trickle down, and there's going to be a lot of it. The big thing for me from this weekend was this tweet by Zero Hedge. No budget caps after 2025 as part of the debt limit deal. That blew me away, okay? Because that means, all right, we're going to do 4 trillion. You add 4 trillion over 31.5 trillion, call it. That's 11.6% debasement, call it inflation. The money's going to come down. It's going to cause inflation over the next 2 years. And after that, they say, screw this, screw debt limits. We're just going to print to infinity. And that's what we've been talking about for years. We are here, ladies and gentlemen. That is the stunning thing. Do you want to invest in something that's going to debase by 11.6% in 1 to 2 years at 5% interest? It makes no sense at all. So over to you guys. Ran, counter that.
So I don't think that they meant there's going to be no cap after 20. I might be wrong, but I don't think it meant no cap. I just meant that they didn't. I think that means that they didn't discuss the cap, and that kind of would be. So they raised for 2 years, and I think what they're saying is after 2 years you would have had an election, and then we should deal with the problem then. I don't think that it's a case of listen, it's just uncapped after the 2 years. I think that maybe you're reading the one tweet as a little bit of a like an out of context. Because if that were the case, then effectively what they're saying is the US doesn't have a debt limit anymore, which is.
But we know they don't. You look at the unfunded liabilities of $190 trillion that is going to have to be paid. It's just, it can only go up. There's no getting back to a balanced budget. Yes, deficits are going to explode.
Yes, and but marketing. Yes, but marketing. But marketing. You can't go to the market. We all know that there's no debt limit, but you can't go to the market and say we don't have a debt limit, because then you've admitted it. That can't be the case. Come on.
Exactly. Well, let's talk about kind of what's going on here as well. This little tweet from Sailor was regarding politics and Bitcoin, and nobody knows money kind of better than Sailor right now. And what was stunning about this is 84% of the voters, it was seen, I don't know how many, a lot of times, but it will become a political issue. And part of it is because that we are in a world where, okay, everybody realizes printing to infinity will happen. People need a hard asset. Bitcoin is going to become political. Ivan, I see you nodding. Do you agree? It will be a big issue in the US going forward and maybe other countries around the world?
Oh, yes. It's like Balaji said that 2024 is going to be the first Bitcoin election. I really like that. I know it sounds insane now, just like 2016 was the first social media election and Twitter election. So there's definitely a lot to that. The fact that the hard assets Bitcoin it really becomes a freedom question. Are people allowed to do what they want with their money? Are you allowed to save in something outside of fiat? Because fiat is starting to look more and more ridiculous. I think many countries are realizing when they look at their own fiat chart that it doesn't make sense. Look at Turkey, Lebanon. You look at so many countries. It's ridiculous. It is like altcoins. It's so bad. So I think just globally we're gonna see more and more people questioning the system. Like, how is it so that these guys can print? They give it to their friends, to big business, to all kinds of people that are connected, and it's different levels of corruption in different countries. But listen, when you have a printer, you have a lot of power, and some countries are more transparent where that money goes, how it trickles down. Some are less. So I think definitely it globally is gonna be a political issue. In the US, I just spoke today about this different candidates. Joe Biden, obviously against crypto. Trump against crypto in 2019. That was the last time he said something. But since then, he's done NFTs on ETH. His wife is printing NFTs on ETH. And also he's pro-bullish stock market. I remember him telling the Fed to decrease interest rates and pump up the stock market. So he's kind of pro-bullish stock market, kind of like pro crypto in that way. And then you have the smaller guys like Andrew Yang, and maybe you probably know better, James. So do you think that this Democrat candidates even matter, because we're gonna have Joe Biden anyway that is gonna be the candidate, or you think that any other Democrat will challenge him?
I think it'll be highly political. I think, you know, the way world works is a pendulum. Hard left, hard right, hard left. And we have gone through that extreme movement to the left. People are going to look for more right topics. I think the Democrats that try embrace Bitcoin are only doing it as a life raft to survive. I think DeSantis said he's going to abolish the IRS as another campaign thing, which is appealing to everybody, of course, but it's impossible to do. until, of course, AI and CBDCs can control all money flows. That's coming to
But
us.
do any Democrats even matter? Because Biden has only had one term. And normally, my understanding is that if it's only one term, then the current president gets to run again for the party. Isn't that the tradition? So you think the other
but I
guys
think
even
he's
matter
gonna
on the
bow out
Democrat
at the
side?
last minute. I think he's just way too old. He's way past it. He's a great person and everything. I'm not going to say anything bad. But Ran, CTO,
I mean,
comments?
I went to see I was at the Bitcoin 2023 conference, and RFK launched his presidential campaign there. And look, I listened to the All In podcast with RFK before the event, and I love his ideologies. I love the fact that he's honest and that he just sounds like he's a smart guy. Problem is that, number one, he has a terrible tremor in his voice.
Yes.
And it's not only his voice, it's actually his face also.
Yeah.
Now it you know, like, you can't have a president that is, you can't be presidential and have that. I mean, maybe you can, but it's a massive disadvantage, unfortunately.
But man, look at Biden. Like, everything is sky's the limit, right? Sky's. But if you're Democrat, if you are the guy for the Democrats, then I think you can get away with a lot of things: age, not being able to speak, anything.
But more importantly, the feedback when he launched his presidential bid was that they're not even going to let him debate Biden. It's almost like, thanks for coming, but there's not even going to be a debate. So kind of like, the whole thing is like, great, you've launched a presidential campaign, go and raise Bitcoin, but you're actually not even going to get an opportunity to challenge Biden. So to me, you know what it feels like? It just feels like it's like a marketing campaign, so that everyone thinks that, it's a fair and democratic process. I think, as Ivan says, the deal's done. The Democrats, short of an act of God or, I don't know, something happening to Joe Biden, which, I don't see them allowing anyone else to come in. You know what I mean?
We need some younger blood for sure. No more of these 80, 90-year-olds. And nothing wrong with that at all. But, it's a busy job. You need high energy levels to keep up. But let's talk one last thing before we get to TE and everything else. I want to talk about this concept. This is regarding Bitcoin and the bond market. Okay, we know they're going to print to infinity. Who would buy a bond when we know the US dollar and every other fiat is going to zero? So people always say Bitcoin's going after the gold market cap. Do you guys believe it's possible for Bitcoin to capture the bond market? Because we saw what happened to the bond market last year, and we know money printing is going to continue. That should have served as a shock to the system for everybody who was even considering bonds. It was the safe haven for the last 80 years. Do you believe a tipping point could ever come to flip from the bond market to Bitcoin? Because that would be a $300 trillion market, about 30 times the size of the gold market. Just food for thought.
I think it's ETH, guys, because ETH has yield, like risk-free yield, you can say, with the proof of stake that you get mining rewards. I don't know if you guys tried, but you should try buying STETH, like staked ETH. It goes up every day. It's like a rebase token, so you have more every day. Now there's a risk there with the validators. Like, it's a network of validators. Like, theoretically there is a risk if something happens, but I mean, that's the closest we have to like an intranet bond, and that should be a no-brainer for most treasuries to at least explore, because for the first time we do have this intranet bond available for anyone that has ETH. It's pretty insane. In terms of Bitcoin, I see it more as a gold and store of value, which is slightly different because it doesn't give birth to new Bitcoins. It doesn't give yield. So it's a bit different. But also, I'm very curious to hear you, James, because I feel that we didn't really finish this debate with, the treasuries. Like, you think people are going to still buy them for the coming years, decades?
Oh, yeah.
Or will the central bank have to step in and pump it up? So that the demand stays good for the treasuries.
Ran had a team of investors on this channel last Friday. Charlie Bilello, Harry Dent, the ultimate in perma bears from planet Earth.
Yes,
I can't remember the third guy.
They predicted
Jim
predicted 15 out of the last three recessions. I love these guys.
Yeah, but they're all like 90% cash. All tilts, like long-term bonds, etc. It's like, oh my God, are you crazy? Especially after what, the market has done this year. I mean, They're hiding out in caves, clinging onto their fiat, and I don't see that as an option. But so that's crazy. Anders, what do you think? Would you buy a U.S. bond, a 10-year bond, when you know the fiat is debasing by 14% per year?
I mean, it seems a really, really bad deal,
Yeah.
right? It used to be risk-free money, that the safest thing you could have. You were sure you were not going to lose money. You were sure you're going to make money. If you commit this now on 10 years, not knowing what will happen, just look at how everything has changed. It's just in 1 year. It's like 1.5 years ago. No one guessed this. And here we are, 1.5 years later. Imagine 10 years what it could look like. I feel it's a huge risk. And compare that then with having that money investable and jumping on different investments instead. It seems like such an enormously much better deal. So I agree. Who is going to buy these bonds?
Yeah,
even if they put 10% yield on it. I mean,
but if you can nail when they issue these new treasuries, I think the price could be quite high in order to sell them. And therefore, if you can lock in, say, a 5.25 rate, you'll always find a greater fool to buy it, and that'll increase the value of the bond. So there is a little bit of upside that I kind of understand. But anyway, enough of that. Let's just talk real briefly about liquidity, because this is really what drives everything. And I know many of you have talked about this. This is global liquidity, US dollar liquidity, global liquidity, and Bitcoin US dollar liquidity. We know liquidity has come into the market through backdoors, like the BTFP program for the banking crisis in the US. We know China's printing like crazy, etc. Ran, over to you. You've done a lot of work on liquidity. Your research team has as well. What's your take on liquidity? Where do you see it going from here? Because that will drive crypto up.
So I think the big player around liquidity is the US, because we know that China is increasing, and we know that Japan is increasing violently, and we know that the EU is cutting or trying to cut. We know that the US is trying to cut, but the problem is they were hit with the banking crisis, which then made them put more liquidity into the market. So, what you should look at is you should look at the components that actually make it up. We have a chart, but I don't have it in front of me, which is kind of shows how it's built up. I think that actually now liquidity is actually decreasing. So I think that actually, if you look at the whole picture, global liquidity for the last short period has been decreasing. But I think let's see what happens now with the debt ceiling. I think the biggest hit the debt ceiling is going to be if Ivan's thing doesn't pan out, and we actually do get the market having to fund, or other countries having to fund, or I don't know where this $1 trillion comes from. If it comes from the Fed, no problem. But I don't think it's going to come from the Fed at the same time when the Fed is trying to manage inflation and unemployment and increasing interest rates and buying back all the treasuries. I just can't see the Fed now stepping in and saying to Congress, "Hold on a second, let us just give you $1 trillion. Here we go." I don't know why, but Ivan, I can't see it, bro.
Flip-flop, bro, flip-flop. Just two years ago, they were never going to increase rates. They wake up on the other side of the bed. They have to flip-flop very instantly sometimes. But let's see, listen, we're all learning, going through this fantastic financial history. So I'm open to all possibilities, but I find this possibility that the Fed will have to buy the bonds. People are not discussing it. And then you look at other countries, like the central banks are buying a lot of the bonds to keep up the prices at a good level. Let's see what's going to happen.
Okay, let's talk about kind of the market. What happened over the last 5 days, and is it sustainable going forward? So first, we're going to look at the pump over the last 5 days. What caused it? The big moves in many, many assets. Let me pop this up here so you can all see. We had a huge move. Whoops, wrong screen. There you go. In Solana, Matic, Bitcoin, Ethereum, Avalanche, DOT, Cosmos. A lot of these are listed as what I call kind of the Chinese tokens that might be purchased in the near future, not June 1st. We're all aware of that. But what do you guys think was the cause of this crazy pump over the weekend, especially? I mean, Bitcoin shot up $1,300 in a short window of time and caught everybody by surprise. And is it because of stackers or very tight balances on exchanges, etc.? What do you guys think?
The market celebrating the debt ceiling deal. The market has to celebrate the debt ceiling deal. They're celebrating the fact that there is a debt ceiling deal. That's what the market's doing, but it's wrong. And there's going to be a hangover from the celebration. You got the NASDAQ at all-time highs, which is a risk asset market at all-time highs. You got Bitcoin climbing up. Bitcoin may be different because it's global liquidity, but I think the market, the marketing narrative in the United States was so strong that we could get a debt default. Yellen came out, Jamie Dimon came out, everybody came out. The US must have been panicking. Now, what are they doing now? They're going, relief. The US is not going to default. And then on Monday morning, they're going to, Tuesday, because it's a holiday in the US today, on Tuesday, they're going to wake up and go, they weren't actually going to default in the first place. What happens next? Oh, shit. Liquidity.
Yep.
Game over. That's what I think. Doesn't make sense.
There's also a lot of cash on the sidelines, at least in traditional markets in the US, about $5 trillion worth. It went up from $4 trillion to $5 trillion. So there is money that needs to be put to work. So if, for example, if the Fed paused in June, it's now 60% sure that they might add 25 basis points. But depending on what the conference says afterwards, that could drive a rally too, because that means debt ceiling's fixed. If they sign it into law, of course. And of course, if the Fed pauses, that could be a rip-your-face-off rally. And then people would deploy money. And again, just like Bitcoin is such a small asset, it doesn't take a lot to move it. CTO, what do you think about this pump over the weekend? You must have been excited.
Yeah, it's very, very interesting, actually. I'm very impressed by the strength of Bitcoin here. If we look over the past a little more than 2 weeks, since May 8th or May 10th, it's, both DXY, the dollar strength index, and the 2-year yield have really, really pumped. And they have pumped massively. They have changed market structure. They started going up instead of looking like they would break down. And what usually happens when DXY goes up, when the 2-year yield shoots up, what happens to risk on assets? They dump through the floor. And here there has been a massive pump, like a market structure changing pump. And Bitcoin is back at the same level as it was around when that started. Yeah. That is very, very impressive. I actually thought we would dump hard here and get some lower entries and so on. That has not happened. Instead, Bitcoin has held up very, very strong. And why is that? In short, it is because there's people buying, at least as much as selling. But why are they doing that? And maybe it is, like we have talked about here, that people realize that fiat is going to be more challenged now. That could be beneficial for assets like gold, like stocks, like Bitcoin. And maybe that's why it's holding up. We can speculate about the why, but it's noteworthy that Bitcoin has held up this well. I wouldn't have guessed it, but here we are. So it's really, really, really impressive, actually. And I have bought back some positions that I sold earlier because I'm really impressed here by the market. And I think from a TA perspective, the big thing that needs to change is that we need to break out of this 30K range. There is a head and shoulder that need to be invalidated, but that's at like 29,500. So that's almost at the 30K breakout. But if 30K breaks out here, then I think there's massive upside, because this is really impressive. Someone is buying. Maybe it's those 10K whales. Maybe it's other players. I don't know why, but fact is that it's very strong.
So speaking of TA and Bitcoin, you kind of read my mind, CTO. This is from Rect Capital. Everybody's been talking about the inverse head and shoulders. First of all, do you guys, Ivan, CTO, believe in this pattern? And do you believe we now have that? It's pretty clear that 26.5, 26.3 was a very good support level. And the big guys are fishing, but the retail has been selling. If they turn to buyers with all the backdrop that's going on right now, could we get to 33K next?
Absolutely.
Before you answer from a charting point of view, I want to ask you a question from a charting point of view. I read today from Crypto Burb. He says, if a head and shoulders breaks down, the invalidation is when it goes above the neckline, and a failed pattern tends to perform better in the opposite direction. I'm not a chartist. I know Ivan and CTO, you guys are much more chartist. Are those two rules generally accepted charting practices?
I think that it's almost correct. The invalidation of a head and shoulder is an even stronger indication than the head and shoulder as such. But the invalidation is not at the neckline. It needs to cross beyond the right shoulder to be invalidated. But if that happens, that's a very, very strong signal. So so there are two head and shoulders here. I don't dare to share the screen now, but one is the one that you're showing there. That is an inverse head and shoulder, which had neckline at about 25K. That's very valid, and it was a real reconfirmation of the bull trend. So that one is really very legit. And if drawing this on the log chart can argue that the target is actually way beyond 33K, can argue that it should be the same distance on the log chart, then we get much further than is shown on this picture. So that is still in play, absolutely. But then we had like not an inverse, but an actual head and shoulder on smaller time frame with 27K as neckline. And that one hasn't been invalidated yet. We need to get to 29,500 to invalidate that. But if that happens, that's a very strong signal. Then I'm going to buy more if that happens. If we get to 30K plus again, we have another strong bull signal. I'm going to add even more.
For the audience, CTO, you're waiting for that 30K breakout before you buy more.
I already have quite enough, so I'm happy with where I am now, but I will add even more if that happens.
Okay, so I understand the logic, but personally, I think it's better to buy at 26 than 30. To some people,
yeah, but it could be also the reason I'm not. I did add back here just yesterday, but the logic from a principle perspective is that if things are uncertain, it's sometimes better to wait because it might be an opportunity to buy lower also, perhaps yes. At 23,800 or something like that. So that's the logic in principle, to wait for one of those two events.
So Ivan, when 3,000?
3,000? Listen, I have one thing to add to what CTO said. I'm following this head and shoulders all the time. Like, people comment my hair. That's because of the head and shoulders. But it is like CTO says, the head and shoulders will be invalidated at 29.5. The right shoulder will be broken to the upside. But just zooming out on the picture that you're showing, James.
Yeah.
I mean, look at that nice bottom. I love it. It's so nice. It has bottomed out, very slowly gotten up with a bunch of pullbacks. I love that as well, because whenever the market pulls back, we have the chance to really confirm to the market that we are bullish, that the buyers are stepping in, we're buying the dip. It's not just a fat finger random pump on small liquidity. No, it's going up, it's going down, buyers stepping in, confirming that yes, we're bullish, we're going up again, we're going down, buyers stepping in. I love it. I mean, this whole recovery, it's so strong. And all in all, we're still waiting until the halving next year. But when I'm seeing this chart, it's so beautiful. This bottom formation is fantastic. And I know you used to look a lot for this bottom formations in your analysis. And I've been following your channel. You've been speaking about whether we have a bottom or not. But do you agree that this is like the perfect bottom you could wish for in this situation?
Oh, absolutely. It was a very clear bottom. And I mean, we all talked about it here on the channel. And I mean, now most people won't remember, but we were all of us here, we were ridiculed for it, right? That we didn't understand that we were going to 10K and so on. But we all sat here or stood here and said that we think the bottom is in, because there were like signal after signal after signal, and they all confirmed that suddenly we started, instead of breaking down resistance, we started reclaiming resistance areas as support. We had massive volume below, meaning big players had bought massive amounts. They were not doing that because they're stupid. And then we got trend turning up, and then we got that inverse head and shoulder confirming. There was like one after another after another. It doesn't get more textbook than this. And still, most people were sidelined because they were emotionally very hurt after the long and painful drawdown. And then it's hard to get out of that mode.
So the $1 million question I have for all of you, especially Ran, when does the front run of the halving begin? Because my thesis is people are much more educated right now than they ever were before. People know April is going to be special, whether it's April 14th or April 11th or whatever date it is. When will people really start FOMOing in? And that, because there's so few on exchanges right now that could really drive that supply crunch. Do you think that could be November, March 2024, or even summer 2023? Or even a possibility, or wait till after the halving?
If you're basing your theory on the halving alone, then don't expect too much this year, because the year before the halving is not a good year. It is a okay year, but the problem with the year before the halving is a lot of people expect a lot more because they get excited by the initial pump. That's the problem with the year before the halving. Now, if you look at the previous years before the halving, the last one, I think we were up 55% in the year before the halving. And if I take where we at this year, since the beginning of, I can show a chart, or you can just take me back to my charts. If I look at where we're at this year, and I'm just saying, if we follow just the halving pattern and we take this date over here and we go to where we are, we're 70% up if we just stay where we are. Now, if you're looking specifically at like the halving alone, that would be a typical pre-halving year. So I don't think, I do believe that the halving ushers in another cycle, but I don't think that we're going to get a halving front run, so to speak, because if it is, I think we may have already had it. I think there's a lot of other factors here at play, but purely from a halving point of view, I think we've had a 70% run this year in the 1 year prior to the halving. I think, that's good enough for me.
Yeah, the most dangerous words in the investing language is "this time is different." But there's a lot of things that are very different this year. We are shaping up for 5 straight months. We are 3% away from 5 straight months of gains. That happens very rarely over the last 14 years.
Bitcoin in the year of a halving is like a stripper at one of those strip clubs where they don't take all their clothes off. Like it's like a tease. It teases you the whole year, and every time you think you're going to get lucky, and then they change the song, they put their clothes on. You got to be careful of Bitcoin the year before the halving. It's a tease. It teases the market.
Okay, so to counter that, so the whales, the 10K whales that are stacking right now, they're making a mistake, and the retail people are smarter. Like, what gives? Again, it's scarce, and we have 45 million wallets now versus this time 4 years ago, a lot less. And that when I look at the adoption, and especially the adoption among the cohorts of 10 Bitcoin or less, it really is going through the roof, and that means, to me, it's a different situation, and the education level is far higher than it was in 2017 and definitely in 2013 because of people like yourselves. So anyway, enough of that. Let's talk about some altcoins. There's one, I did a video a long time ago called Solana Killers, Sui and Aptos, and I was looking at a dashboard there, and I saw that the Sui has 333 exactly on the nose daily active users. And based on the fully diluted market cap, that's $33 million per daily active user. That's kind of ridiculous. So what's your take on that? And I know you have a position.
I'll tell you what my take is on that. Okay, so if you're going to come from Facebook, which is the arch enemy of crypto, right? If you're going to come with Facebook culture, corporate culture, which means that you have no idea how to build crypto communities. When was the last time that you heard of the Sui community or even the Aptos community? When was the last time you heard of anyone that had any kind of tribalism to Aptos or Sui? Probably the last time that you felt any kind of tribalism to Facebook. Now, I don't know anyone who's ever had a tribalism to Facebook, okay? So you're already at a disadvantage coming from Facebook and Sui. Now, the worst thing that you can then do is commit suicide by not doing a fucking airdrop, okay? Like, you cannot not do an airdrop because no one is interested in your token, okay? No one cares about the Sui token. No one's interested. No one's trading it. No one's building shit in it. No one's using the dexes because no one got the airdrop. So yes, congratulations, well done. You saved yourself the airdrop, and you did a good thing, and you got a few headlines on the day. But long term, no one gives a shit about your token. You want people to give a shit about your token, you need to make sure number go up. There's a very simple formula for number go up. Okay, this is not like a very complicated science. Listen to this, okay? This is what you do. You do an airdrop. You have a very high fully diluted valuation and a very low token circulation for the first 12 months. That's it. You don't have to be a genius. That causes price action. Price action causes tribalism. People become addicted, and they become in a relationship with your token because of the price. Sui doesn't have that. Sui's lonely. Sui's dead for now.
Yeah, CTO, do you track any of this stuff with these new alts, the new layer ones?
I hadn't tracked the number of active users. Actually, it's very interesting, and it's absolutely fascinating. And I don't get it. Why are they not, buying marketing or something? This is ridiculous. 300 users. My God.
No one cares.
I mean, they should have more like, friends and families. The moms of the people working there should, and their friends should be more users than this. I'm shocked.
You launch after your competitor, Aptos. So already you're not the first to market, you're the second to market. You can see exactly what works and what doesn't work. And what do? You come here and you say, you know what, we're going to do it different because we come from Facebook. And at Facebook, we know how to do things. Well, how's that going?
They didn't learn about Facebook ads at Facebook or something. Yeah, I don't get it. How can it be that bad?
And Ivan, I see you smiling there too. No, because I don't really follow. We kind of discussed it already weeks ago, and I love that you're bringing it up. When I saw the agenda for today, I saw Sui wrecked or something. you have this recurring theme coming back to Sui Gems. But listen, I agree with everything what you said.
It was Aptos last time, never Sui.
Oh, right.
Aptos.
No,
yeah.
I remember us discussing this airdrop thing in the past. But no, listen, I fully agree. It's there's no community, no pump, no free lunch, so no one wants to buy in high. It is what it is. There are no shillers, there is no Twitter, there is no cult, there is nothing. So let's see if they get to greener pastures. I'm wondering if you guys follow ICP, because that's one that I see sometimes people mention. Like I think Ben BitBoy, he's a bit bullish on that. I'm not very into it, but that's also one of these projects which is it was super expensive and just been falling and falling and falling. Do you guys follow any of that? Is there anything happening, or it's also part of this Sui crew, which is where do we, in which compartment we put ICP?
Oh, we built a model here called a crypto compendium, and we noticed that everything that BitBoy, much respect, of course. Everything that he pumps has the worst crypto compendium scores on earth. So it makes me think, because there's direct correlation. Like he was wearing a shirt the other day with all these different brands on it, and they all need.
He said I would not invest in a single token on that shirt. It was XRP, ICP. I'm not going to mention other names. I don't feel like community is coming to attack me, but you know who you are. I saw that shirt and I showed it to my research team and I said, look, every single one of these is going to zero.
That's exactly what we thought. So crazy times.
On that note, would you buy Ben, the token Ben? Would you invest in the token Ben?
I only buy pristine assets. Money is too valuable to waste on memes or scams. So if they had a lot of optionality and a lot of market liquidity, I'd take a flutter. Kind of like playing with a GameStop or something like that, a meme stock, meme token. But the problem is I can't, exercise my trading strategies with these little things because there's no liquidity. You and I have had that discussion, Ivan, too. So is there any hope for any of these new names? Like what will drive, we know that community culture is so critical in crypto. Ivan, you've been hammering that home too. We know the narratives this year, but what will really make it in the next bull run and what will shrivel up and die? Any thoughts without getting attacked?
Yeah, well, there's a very good podcast, which is very small. It's called Good Game Podcast. It's super small, but they said something very interesting the other day, and that's that this coming bull run is gonna be a bit more boring, but way more impactful. It's kind of like when Apple stopped innovating too much with the iPhone. Everyone said, "Hey, Tim Cook is now the new CEO. Let's go VR, this and that," but he didn't do anything new. It was basically just improving the iPhone, making it better, making it super perfect for the use cases that were already invented. So I feel it's going to be the same, that probably we're not going to see anything too crazy in terms of new tech, new fantastic capabilities and innovation, just perfecting what's already here, which is a lot. We have a lot. We have DeFi, we have staking, lending, payments, but none of it is really good for mass adoption. So I think that's what's going to happen this bull market. And wherever there's the most liquidity, the most users, the most usage of what we already have, that's probably what's going to be the best. So I'm following those metrics, and not that much, there's a new tech now, this crazy innovation, because we have all of that already. We just need the current use cases to go to mass adoption.
Yeah.
But even for the current use cases, do you think it will be new projects that start from scratch, or will it be existing projects that improve enough, make the better iPhone? Yeah. Which of those two do you think?
Well, in crypto, we all build on top of each other. So that's why I think it's going to be both. New projects are going to build on top of existing ones. A good example is right now what we're seeing with staking. So for example, you have STETH and RETH, which are Lido and Rocket Pool, two of the biggest decentralized staking networks on ETH. But then on top of that, you now have a whole new ecosystem with liquid staking finance, where soon you will have stable coins backed by yield producing ETH. So your stablecoin will pay you yield, this risk-free yield from staking. So I find that fascinating, that we can have stablecoin and it's paying you yield. I mean, so that's an example of a use case which is nothing new, but it's a new project. It's building on top of existing projects. It's sharing existing liquidity. But I think there's definitely room for new stuff, because it's only adding. It's building on the same Lego that we have.
Well, I invested in a project recently. I'll mention it. I have mentioned it to my community. I'm not telling anyone to buy it. I'm just telling you I invested in it. It's called a project called Tenet. What they do is their validators have to stake liquid staking tokens to become validators. So, with ETH, you have to stake ETH to become a validator. With Solana, you have to stake Solana. With Tenet, you have to stake liquid staking protocols to become a validator. So, you're creating a new use case for the liquid staking protocol. So that's what Ivan says. We're going into a world now where there's all these new use cases that we haven't even imagined. By the way, I checked today, and look, it is a bit of a skew metric, but the biggest use case of DeFi today is LSDs. If you look at the total, the most used platforms in DeFi today, it's liquid staking protocols. It's not DEXs anymore. Now, okay, obviously a lot of it is measured on TVL, but even in terms of transactions, the liquid staking protocols are becoming one of the biggest use cases in crypto. Now, that's a very, very, very encouraging sign, because it's what Ivan says. It's the reason why Ivan believes that ETH will beat Bitcoin, I think, if I'm not mistaken, because of the yield that you're getting on the token. And now you're getting yield on the derivative of the token. So you're getting like multiple layers of yield on the same token. You're getting yield on
I see a very good question in the comments, because people are saying it's like disconnect. But here's the big difference. Why this yield is like in this industry is called risk-free, because as you know, ETH switched from proof of work to proof of stake. So this yield is just mining rewards. So when you do LSD, just so everyone in the chat is clear, this yield is coming from mining. It's validators that you give your ETH to, and then they produce yield from inflation. So there's no like game theory or like with Terra Luna, because it was all about game theory and Ponzinomics. I mean, this is yield from ETH mining, which is now proof of stake. It's not physical mining. It's and instead of giving ETH to validator directly, you can buy STETH or RETH, which is representation of a stake in such a pool. So anyway, what you guys should do if you want some homework in the chat is to try buying STETH or RETH and just experiment with it, because you need like physical, practical experience with staking to really understand it on chain.
Awesome stuff. I just want to remind everybody, please subscribe to those channels below if you haven't already. Ran, CTO, Ivan, I know we probably already all subscribed and hit the like, so we can get all the time that these guys spend with us to share all of this information. It's really, really valuable. I'm going to open this up. This has been a good conversation today. It's been a great weekend, to some Q&A from the audience.
I'm late for a call, but love you guys madly. See you guys next Monday on our channel. Yes, next Monday is on our channel. So I got to jump. I'm 5 minutes late for a call.
What's the madly. Cheers. Bye. So it's just the three of us left. This is great. First of all, a shout out from MT. Thank you, crew. Always get a lot of alpha from the collaboration. Just a great lineup. Shout out to CTO, Ivan, Ran, etc. And then Kokinho. Between Biden and DeSantos and Pudgy Penguin to run for president, who would do a better job to help crypto?
Well, I mean, speaking about Pudges, guys, have you seen the chart of Pudgy Penguin? You can open it up on OpenSea. It's up in the bear market. Like, people are saying NFTs are dead. Not Pudgy Penguin. Now, most NFTs are dead, yes. But just like there are some coins that have pumped in the bear market. Like, I think GMX, it launched and then it mostly went up. But if you look at Pudgy on OpenSea, it's like a nice trend up. So, like, you're speaking about pristine assets, James. If you are ever interested in NFT stuff, then you of course have like Bored Ape, all of the big ones. But Pudgy is one of these that is like smaller and that also has a nice trend, nice volume and liquidity and all of that. So if you want to if you want to expand your Degen horizon.
Yeah, there's places that I don't do well. That's gaming and NFTs. But this another very, very cool question. This is from Just Watching 1980. Are most devs going to AI and leaving blockchains? Because we've seen a big drop off in the amount of developers, real-time developers at blockchains. And I think that's a very valid question. In fact, coincidentally, we had the first ever blockchain integrate with ChatGPT. Does anybody know the name of that chain? I forget.
ChainGPT.
It's Solana. Solana was the first blockchain to actually integrate AI into their platform, which is big. They're doing a lot of stuff kind of first, which is interesting. But what do you guys see in your communities? You know, you guys are tech guys. You can watch. I always say, follow the developers, follow the money. These are the people that invest their time, and they invest their time in things that will be very rewarding down the line. So it's kind of the first movers. And I learned that in Silicon Valley, late 90s, early 2000s. I was watching developers leave solid companies, you know, like they'd move from, say, Microsoft to Facebook to Square to et cetera, et cetera. What do you guys see happening now?
I think there's definitely a drop in engagement in blockchain and crypto in general, both from investors and from community members and from developers as well. I think that's a fact. And they're all heading to AI. But what I think is that many of these are kind of late. We talked about it before. I programmed AI, it was 1992 in Linköping. I studied computer science. That's how long it took. And then it took 31 more years until AI could pass a doctor's or a medical exam. But the principles are pretty much the same. And I read an article about NVIDIA now, who is celebrated so much, and how they put in this hardware capability, the CUDA, in the graphics card. What was it, 10, 11 years ago? And all their investors were angry at them and said that they should take out that stuff out because it's hurting their profitability. They're putting hardware in, which isn't really used, but they had to solve a hen and the egg situation. They saw the possibility, they saw the opportunity with AI, and they wanted to build a new programming language, but no one's going to program on it if there's no hardware, and there's not going to come any hardware if there's no programming language. So they solved that hen and egg situation by putting this hardware in, which no one really used for this long. And then now they're kind of the winner because of it. And that's 10, 11 years ago. Now everyone's jumping on, but which AI company are they going to start building today? They should have started years ago, I feel. So I have a feeling that a lot of these people, they're going to build something fluttering a little bit on top, integrating to ChatGPT API, sending some requests, to getting some response, to publishing it on a web page, but that's not going to really change the world that much. So I think that a lot of these investors, developers, they're going to be super excited, but all the easy things, 500 others are going to build also on the same day, or same week. It's not.
But do you believe anything. But do you believe the technology is changing so fast that you can be late and not miss out? Ivan?
I think a lot of them will fail. That's what I'm saying. I think a lot of them will come back and pretty soon. I think. But of course, if you succeed and everything, I mean, AI is very real. It's one of the big revolutions of our lifetime. But I think now everyone's running after the same. It's like a truck driving by, and all the dogs are barking and running after the truck, but they're not gonna catch the truck, sort of.
Good analogy, Ivan.
Yeah, I think that there's always the waves of tech. And the worst thing you can do as a dev or as a professional is to just drop everything and run after the trend. Because then you're not good at anything. You're going to catch this trend, that trend. In reality, the best strategy is to just focus on what you're good at and where you have the most unfair advantage. And blockchain is still the space where if you're a developer, you can be worth a lot of millions if you just spend a few years here and learn it and apply it. Because the demand is going to be massive as crypto is the world, which is in my mind inevitable. And you can actually change the world in crypto way easier than in AI. Because to do anything in AI, you either use the API, like CTO said, but then, I mean, you're not really in AI. You're calling ChatGPT API, you're building on top of them, and there are many people that do the same. So you can do that, which is like AI, but not really. Or you can do real AI, actually develop these models, but then you need 10 years PhD education, and then you can only do a small part of a big system. So it's very difficult to actually make a difference. If you're really not into this heavy math and you're really fascinated by AI, I mean, obviously there's always opportunity. You can build on any platform. Look at, for example, the browser extensions. People said in the beginning that who can build billion-dollar company on browser extension, but you have Honey, you have a few like the Grammarly. It's possible. The same with AI. Can you build on top of ChatGPT? Probably you can build some billion-dollar companies on top of that. But I think for the average dev, the land of opportunity is crypto. If you want the maximum chance of success, you have to be in crypto, because that's where you can build money that is global. You can build applications on this open financial stack, which are global. And most devs, they're not really rushing into it, which is fascinating to me also. Even in the bull market, we had a lot of devs coming, but it wasn't that every dev was fascinated by crypto and every dev was fascinated by Web3. So I do feel that Web3 is the biggest opportunity still for devs, and it's going to be for a long time. And AI, I mean, if you're a dev in Web3, focus on Web3. You go to AI, who are you there? You're no one there. You're going to start from scratch. You think you can call some APIs to ChatGPT and do something? Absolutely not. Now, some of them will succeed, but the best is crypto, guys. I mean, there is no second best, like the famous quote. There is literally no second best for career of any regard. You can be whatever career you want, do it in crypto. It's going to be 10 times faster. Absolutely.
So there was another question just came in from Philip Rodriguez. There was a lot of people concerned last week and the week before with the ledger debacle and everything else. And then the Trezor can be hacked in minutes if they are in possession of the key. The question for the audience is, well, my question to you guys is, what do you think of all that wallet hubbub that happened? And the question from Philip is, what wallets are you using now? What do you trust?
I think it was a massive. Yeah, I mean, I felt very disappointed about this whole ledger thing. I think it's still the best option, but I mean, it was a massive mistake. I felt the whole point is that you can't get the whole point of the device is that you can't get the private key out of the hardware. I felt that was the whole point. No matter how hacked your computer is, no matter how hacked Ledger Incorporated and all their partners are, because I don't know if someone is new here, you might not remember, but Ledger, the company, was actually hacked in 2017, and they got the email address of everyone who had ever bought a Ledger device through their third-party supplier they used to execute the sales, which was a massive security problem. And companies like LastPass, that's one of the oldest password managers, was one of the most respected, and that's all they do. IT security is all they do. They got hacked. The entire database of everything they had, all the information got leaked. Only the things they didn't have, things that were encrypted at the point of the end user, was not leaked. Everything else was leaked. So these companies do get hacked. And then imagine if there's, I don't know how many billions of dollars would be on stake if you can hack everyone's ledgers. How much would that be worth? 100 billion or something like that?
Yeah, I heard Ledger
imagine the
3 million keys, 3 to 4 million keys in circulation, and Trezor have another 3 to 4 million keys. So that's 8 million
Yeah,
keys
so,
potentially.
yeah, so I mean, the effort would be enormous. And then with this history, thinking that, but that can never happen. I think that was a ridiculous take. It was dumb. They backtracked on it. But yeah, I didn't like it. I was one of the ones who got my email address hacked in the original Ledger hack. And I'm still getting scam attempts for that
And
6 years later.
And free keys. Here's a replacement key.
Yeah.
I heard they're sending out ones like
So
that too.
I didn't like it. I think Ledger is still probably the best choice, but I don't know how they could be so dumb, honestly.
Not Trezor. And the importance of open source code. Do you not think that's important as developer?
Yeah, and it's a big difference with Ledger and Trezor that Trezor is more open source in more of their parts, but at the same time, you don't know what Trezor is when you hold it in your hand. You don't know the hardware or the software. You don't know who developed it. Is it someone at the factory that has replaced? So that's why, personally, I don't trust any of them. And the good thing is that now on ETH, at least, there are good multi-sig solutions. I keep preaching it since this Ledger thing, that you can go to Gnosis Safe, which is like the multi-sig that everyone is using. Like every treasury in ETH, everyone who is in ETH is using Gnosis Safe for multi-sig. It's super easy. You connect your wallets, then you can decide you want 3 out of 5 signatures, 2 out of 3. You can then use one ledger, one Trezor. Then another thing which is becoming big now are the cards, like Tangent Wallet. If you guys haven't tried it, you should try it. It's basically that you have your phone and your private key, you just blip a card, and your private key gets transferred onto the card and you encrypt it with a password, so you never have to write down. I think this is like a bit prehistoric thing that we're writing things down, and then you can have like several backups of the card. I find that fascinating, because it is it's just bam, blip, that's it, and encrypted. So there is no way, like, no one knows the key. I don't know the key. No one knows the key. The card has the key, and it's the same idea that it's impossible to get it out, and no one can just lean over your shoulder and see it. And then, so that's why, like, the best thing is to have different vendors and then put it into a multi-sig with like 3 out of 5, 2 out of 3, and so on and so forth. And it's easy. Like, it's not hard. Going to Gnosis Safe, it's not hard. And then you can, if you want, geographically distribute the keys and all of that. So it's how far you want to take it. But the bottom line, you never know what you're holding. You have some device. Who the hell knows what's on it, and whether it's tampered or not. I mean, imagine we're trusting the sticker. Like, this industry, we're trusting that the sticker is on the package to tell us that it's secure. I don't like it. That's why I like this, that we're splitting up in different vendors and multi-sig.
Excellent. And first of all, Grüezi and Ali Schweitzer in publicum. So we have a question from Switzerland, from Criticalis. Given the knowledge of the last bull run and people pricing this in, how can we expect a similar cycle for the next halving? And this is kind of like part of me thinking everybody knows it's coming. Everybody knows that supply coming to the market will be cut in half. Everybody knows adoption is growing. The economics of it just will drive a price and spike. So the question is, everybody saw the last bull run and the importance. What do you think will happen this halving? Again, I don't think we got a clear answer when we discussed this when Ran was here. Do you think there will be the front run of the halving up to April 2024?
Yeah, I think we discussed it a few times that the halving cycle is repeating exactly, and in theory it shouldn't, because we all know that it's gonna be big, and the halving is happening. It's known already. But the way I'm thinking about it is that the world does not know. The world still thinks we're like scammers and lunatics and shady people on the blockchain. I guess that's why. But I'm curious to hear your words. But clearly, the whole world is not in crypto. Otherwise, everyone would be buying already and front running. But they're not doing that. So still some knowledge to be spread out via a few of these halving cycles.
Yeah, I ran some numbers. Even if the millionaires and billionaires, just Hong Kong alone, decided to allocate 1% of their money to Bitcoin, they'll blow it up. It's a tiny place.
Yep.
It's just so small. The question is, what's going to happen? It's fascinating to watch. I'm very excited for the next 10 months. CTO, any ideas? Front running or not?
Yeah, I mean, I would have thought maybe it wouldn't repeat another time, but I mean, here we are, and so far it's repeating exactly. I I try to react more. I mean, if it doesn't play out, I'm not going to stick to that. But so far, it is playing out exactly. The trend is up exactly like it was on the previous ones. And yeah, maybe it repeats again. Who knows? But I will stick to reacting to what actually happens. If it starts deviating, I'm going to take action accordingly. But so far, it's really exactly the same.
So I always look at the
And
multiples.
I think that people saying that but people should have known and so on. But if thinking back how it felt, 2022, we're going down for an entire year straight. Everyone starts saying that, okay, it's over now. This time it's going really much lower. It's going to 0. It's going to 10K, 5K, 1K. And no one dares to buy. So it's very, very difficult to buy when it doesn't feel it. I mean, the point to buy, it always feels like this is just a scam pump, or this is just, a blip. I'm the dumbest person on earth for buying this one when it's clearly going lower. If it doesn't feel like that, it's probably not the bottom.
Great. Final question, because I know you guys have spent so much time here and it's late where you guys are. Still bright, of course. And this is from Nick. How long do you all guesstimate products, services are priced in Satoshis? Now, my theory on this, it'll be commodities first. It could be oil priced in something like a Bitcoin first and then services later. Do you guys have a perspective on that?
Yeah, I mean, ETH is leading the way. There are way more things priced in ETH than in Bitcoin, like all NFTs, all tokens. So unless Bitcoin does more DeFi, which I just read today that there is now stablecoin on BRC20 ordinals. So let's see if DeFi takes off there. But I see that just like nothing is really priced in gold, Bitcoin is heading that way. If we don't start pricing online things in Bitcoin first, and ETH, we do that all the time. And so once we have all the online world priced in ETH, like it is becoming now, maybe next step is this physical trade. But we haven't yet seen the countries denominating their trade in Bitcoin. They probably would pick Bitcoin and not ETH. But when it comes to just overall, it feels to me, at least when I'm interacting with the internet, that most things are in ETH denominated. And if you're on Solana, probably most things there are in Solana. So Bitcoin is not really winning that.
That ties back into the bond market discussion we had earlier too. ETH first. So you seem to be heavier in ETH than Bitcoin. Are your bags proportional as well?
I mean, I have approximately the same allocation to Bitcoin and ETH, but I mean, with Bitcoin, I'm more and more frustrated that I feel like I crippled, the handicapped. I cannot really do a lot, and the price performance is the same. So it's not like we're missing out by not having Bitcoin. And I like to be able to do things without middleman. With Bitcoin, I mean, if I'm not just hodling, there's always a middleman involved, and who knows, are they gonna freeze my KYC when I deposit because I haven't used the exchanges in so long? I don't like that. I don't like any middleman. So that's why with Bitcoin, I'm feeling increasingly more and more handicapped when you see how much things you can do on ETH without using middleman. Now, Bitcoin is Bitcoin, obviously, but with time, I'm feeling more and more handicapped in there. But it is gold, so yeah, Bitcoin is digital gold. So
yeah, I mean, I do have some perspective. You both have products on the internet. You both same like me. I have a product on the internet, and people can choose if they want to pay with card, bank transfer, or crypto. Because I want to experience it myself. I want to see how it is, how it's actually working to sell something and charge in these different mechanisms. And the fascinating thing is that I don't think many people realize how expensive it is to charge something with PayPal, especially if not living in the US. It costs 10%. If someone sends money, before that's on my company bank account, 10% goes to PayPal, even if it's like a substantial amount. 10%. It's not an exaggeration, because they hide a huge fee in currency conversion, which they do for free. As it says, they write it's free, but then they take out 5% in the conversion fee. Then there's actual fees. So 10% is what PayPal costs, and it's still, in my opinion, the second best after crypto. 20 plus years after Elon Musk and company created it. The website, by the way, looks the same as it did then. So they haven't innovated. They're still second best, because the advantage of PayPal and crypto is that as a seller, you don't need to get involved in people's credit card problems. You just know if they paid or not. and that's it. And then in case of PayPal take care of everything else. If you are doing it more with Stripe or something, you get more involved in people's if they paid or not. So that takes time. So that's why PayPal is still the second best. But my God, 10%. And then compare that with Bitcoin or ETH or Sol or any other, Doge, any cryptocurrency. It is like people complain about the fees are high. Yeah, but I mean, what are we comparing with here? It's extremely expensive to use anything else.
But people need to get used to using the wallet, and that's why in Bitcoin, like most people don't even know like where is that ledger somewhere. But that's why we need DeFi to be a daily use case, because then people are used to using it to trade, to buy coins, to buy NFTs, and then you have a digital product you're selling online or a physical one. People already know the wallet is up, wallet connect, bam, connect to the website, mobile wallet, super nice to use. With Tangent card wallet, you can just blip the card if you want and pay. So I just don't think we have this culture yet that people really, use their crypto in the daily life. But I think it's changing. I mean, one thing is that we maybe will go away from this, writing down seed phrase by hand. And the number two, more and more websites are financial websites. So you connect your wallet, you trade, you do stuff. Your identity is more connected to your wallet. So yeah, all in all, I'm bullish long term. But first, before we will be selling real world stuff in crypto, we need to sell crypto stuff in crypto and less stable coins, more ETH. I mean, that's what I love to see, that we natively price our assets in native insurance currency like ETH or Solana or all of that. Disconnect from TradFi. That's my dream. That where it's on chain, no middleman, and ideally also not that many stable coins. It's ETH, Sol pricing, and other native coins.
Yeah, I agree 100%, and that's what's really my point. I mean, the value is enormous, as anyone who has tried actually using it and compared the alternative. But the usability and the experience isn't there. For many people, they write that it's the first time they actually use Bitcoin or any crypto to pay for anything other than altcoins.
I have a data service
it's
vendor.
Not there yet. And then, the backend system for checking is not there. Accounting systems are not there. Everything else has to be manual and so on and so forth. So we're not there short term, but long term we will be there, because the alternative of fiat-based systems are so expensive and so bad.
I was surprised. I have a data service vendor in mainland China, and they only accept two payment methods, USDT and Solana. And the Solana one took me by surprise.
Wow,
village
that's
in
nice.
China, tough data play, but it is super interesting. So with that, guys, we've got a long time, nearly 80 minutes. I want to thank you both so much for being here. I want to thank everybody in the audience. I want to remind everybody, if I can find the thing, please subscribe to these guys if you haven't already. Probably unlikely you haven't already, but the links are below. Thank you both. Really, all our minds get bigger every single time we do this. We all learn from each other, and I love your counterpoint, Ivan, on ETH versus Bitcoin for the bond market. I think that's very interesting, and everything being priced in ETH first. And CTO, everything that you bring to the table as well. We've got to figure out how you get to show your charts again. I did report the bug, and there is an update for the streaming software. So hopefully next week it'll be fixed. So with that, guys, thank you so much again.
Thanks, guys.
Say goodbye to everybody. And that's a wrap.
See you guys. Thanks a lot.
Bye. Thanks everybody in the audience.
Bye-bye.
And the mods in the channel.
Bye-bye.
Bye.